Hi there, welcome to Nepi Invest and welcome to May 28th, 2024. We have about 1 hour left in trading today, and overall, today could be categorized as a little bit weak, unless you're in small caps, and you probably say a lot weak. But if you're highly invested in mining companies, you'd say it's been an okay day just by looking at the indices up the top there. So, for the agenda in today's video, I will have a look at a few tweets. I did bookmark at least one, and then I'll go through the ASX today. We'll have a look at the best performing, worst performing companies, and then we'll do a top 5 announcements, a few honorable mentions to talk about, a few companies doing capital raisings, another company talking about gummy, and I thought it was gummy bears or that sort of thing, and I was just laughing about it, and I have a feeling it was about gummy, the thing you eat, those treats or those sweets or whatever you want to call lollies that you do eat. A few other companies on this list I do want to talk about that did not quite make it into the top five. And then we might have a look at a few charts if I do have time. So let's have a look at a few tweets. And the first one to pop up was Rudy Villapek talking about Pro Medicus. There are not many certainties in the share market, but Pro Medicus announcing new contract wins is definitely one of them. Well, thanks giving it away. One of the companies that did make it into my top five list, Pro Medicus, but that was not one of my bookmarks. It's just the first thing that's sitting there. Bar chart, unbelievable. How is Nvidia sitting at $1,100? This is the biggest bubble in history. And there's another someone who just doesn't understand Nvidia at all. And the biggest bubble in history, that person doesn't know anything about bubbles. So here's a few tweets. Yeah, I actually do have a few tweets here. In fact, I bookmarked about 5 tweets, looks like. Talking about, this was an interesting one from Warren Pires. I actually did have a thing about this. I went, actually, that does make sense. Here's an overly simple rule, stock market rule. You could have left out at least one rule there. That's worked for a few years. Long S&P 500 when oil is less than $90 a barrel. Cash when oil is above $90 a barrel. Since 2021, only 3 years of history there, this rule of thumb has kept all drawdowns contained and captured most upside. Oil drives inflation vibes and expectations. It actually makes sense. When oil is higher, you would think that there is more chance that inflation is going to be higher and more chance, a little bit of weakness in the equity markets. And he's got a chart here with this particular strategy, and it does or has worked well since 2021. So there's many strategies you can deploy when it comes to any number of things. So whatever floats your boat, that's the one thing I'd say. Whatever works for you, use it to your advantage. The Kobe Essie letter, talk about buy now, pay later, how that is absolutely exploding. Increased by 18% in 2023 to 316 billion. Buy now, pay later usage has doubled in just 2 years. Should we be getting excited about Zip and some of the other buy now, pay later players? I think this is just highlights that a lot of people out there are stressed or under financial stress. There's no reason to use buy now, pay later, in my opinion. And I also believe many people are living outside their means. And if you need to use buy now, pay later, you're probably living outside your means. That's just my opinion. Maybe I'm wrong. I've never used buy now, pay later. Just don't need to. Just don't need to. And I think wait, I'm going the wrong way there. And what else do we have? Drunken Miller interview talking about AI, talking about how he did sell out or cut his Nvidia holdings, and he's bullish on copper, Argentina, and Japan, not investing in China under current leadership. Yes, I probably sort of agree with that. I'm not sure about being bullish on copper. Who knows? Because it's a commodity. Argentina, Japan, no idea there. The interesting thing about AI is he's bullish long term, and that's understandable. And what he's doing here, he's talking about, and maybe they do talk about it here. Yes, he actually, in fact, the first reply, if we're all sitting here in 1999 talking about the internet, I don't think anyone would have estimated it was be big as it got in 20 years. And yet, if you bought the NASDAQ in 1999, it went down 80% before all that came to fruition. Now, one person might say this time is different. I wonder if anyone does say that. Well, he's talking about why he's bullish on Argentina, Japan, and copper. Haven't gone all through this. And I would assume that someone eventually has replied saying this time is different. Uh, with Bailey by selling off Nvidia, $2 billion profit miss. Anyway, I do think this time is a little bit different. If you look at the makeup of the Nasdaq back then, there was a lot more frothy type companies without any revenue or any profits. All they had to do was put .com at the end of the name. So it is a little bit different now. Most of the companies right now that are running hot, and if you have a look at the valuations comparison, some of these companies are not that expensive comparatively speaking. So I don't think we are in any way close to the bubble we saw back in 1999, that tech bubble back then. No, I don't think we're anywhere close to that. Another one for bar chart, talking about the longest yield curve inversion in history. Yes, we're in the longest yield curve inversion in history, beating the Great Depression yield curve. Does that mean anything? 475 consecutive trading days. I'm not sure if there is any correlation between length of the yield inversion and whether the recession we're going to have might turn into a depression or Great Depression. I don't know, because there's not a lot of samples when it comes to this. Only like 8 or 9, not many. But it is the longest yield curve inversion we've ever seen, which does point to the fact that there is good chance we might move into recession eventually. It has to uninvert, I believe, before we move into recession. If I remember correctly, every single time we've gone into inversion, then that does suggest we will move into recession, but it does uninvert before we go into recession, if I remember correctly. Okay, that's some interesting bookmarks. A lot of interesting stuff on Twitter. Now, the bad thing about Twitter, I'll just show you. Now, yeah, there's a lot of crap, a lot of ads. There's too many ads. Now, I'm going to show you, but most of these are not ads. But sometimes I just look at it and there's like this one, Fever Global. I don't care about flamenco. Sometimes you just get ad upon ad upon ad. And there's another one, self-sustaining 3D printed houses generate electricity. Well, I don't care. Anyway, let's move on to the ASX today. And yeah, down a little bit. So 8 sectors down, 3 sectors up. So real estate, staples, and materials up a little bit, but not a lot. All other sectors are down. I'm pretty surprised that we are not down as much as we are, because industrials down 0.8%, utilities, discretionary, telecommunications, all down by more than 0.5%. We'll have a look at the ASX 20. Only down 0.13. That's why. So many of the bigger companies on the ASX have had an okay day. And gold had a pretty good day as well, up 0.4%. I'll just click on the ASX 20 just to see which companies have done well today. So I'm assuming maybe 9 companies are up, 11 companies are down. No, we'll say 9 companies up, 10 companies down, and 1 company is unchanged. So 14 down, 6 up. Okay, so most of those companies down probably aren't down by much, or a few companies that have risen may have risen by a fair bit. So let's have a look. Best performing companies, Santos, Aristocrat, NAB, ANZ, so a few banks there, CSL, Goodman Group. So I do own 1, 2, 3 of those companies. Yay. And the worst performing ASX 20, Transurban, Wesfarmers, yeah, Macquarie Group, Westpac. So it's interesting. Some of the banks have done well, some banks have done badly. REA Group, WiseTech, a few companies I own there. So I'm surprised how many of the ASX 20 companies I do own. It's about 5, I think. REA Group, WiseTech, Goodman Group, CSL, and Aristocrat. Yeah, 5 out of the top 20 I own. And most of the other companies I probably won't own, maybe Wesfarmers. I can envisage owning Wesfarmers, but I think that's about it. All the other companies, in my opinion, are lower quality companies that you just trade. Anyway, so let's have a look at the best performing companies today and the worst performing companies. We don't want to ignore those top losers according to Market Index. We'll start with the top gainers. Forestania Resources, best performing company by change, pretty good turnover. I do have that company on my list to talk about, but did not make it into my top 5 announcements of the day. Maybe it should have. Share price increased 163%, although the markup is only $8 million. They did talk about something in regards to an iron ore. They bought an iron ore project or something like that. Not the sort of announcement I would get overly excited about, but I will put that company into a watch list And that watch list is a project I hope to complete within the next few years. CAQ Holdings, low turnover. So nothing else here that is interesting as I go down. And now let's have a look by market cap. Mesoblast, not released anything today, I'm pretty sure. Spartan Resources, I'm not sure if they released anything today. I'm just going to have a quick look. Strike Energy did. That initially did make it onto my top 5 announcements, and then I forgot about this other company that released an announcement, so that pushed Strike Energy off, up 7.3%. I will discuss Strike Energy in the honorable mentions. PlaySide Studios, not surprised it's on the list, although I did expect the share price to be a little bit higher, and that's the reason why PlaySide Studios is number 1 in my top 5 announcements of the day. Visan, happy that's on the list. Gold Hydrogen had a nice little bounce after yesterday. Metro Services is here as well, and that is on the top 5 announcements of the day. Coming in number 2, not surprised that's up 8%. I might have, if I had to guess, based off the announcement, the share price should have moved much more than 8%. And I do think Mitchell Services looks really cheap. Okay, so that's the top gainers of the day. So I've already talked about 2. Now let's have a look at the top losers. And I'm pretty sure 2 of these companies in the top 5 announcements will be on this list. Now, DY6 Metals had a massive day yesterday. It's not surprising it's down today. I'll have a look at the chart maybe if I have a bit of time with DY6 Metals. And any other company here? No, oh, there it is, Boss Energy. Did make it onto my list, coming in number 5, down 11.9%. I'll discuss why the share price of that company is down. And to be honest with you, it's no reason to be concerned about at all. Just my opinion. And Peter Warren Automotive, down 11.5%. That is one of the other companies on the top 5 announcements. They did release a trading update. And whenever a company releases a trading update and share price drops by 11.5%, it will make it into my top 5 announcements. So there's only one company missing. Only one company missing, which means this company probably should not have made it onto the list. But it has, coming in number 4, Pro Medicus. Okay, so that's the top winners or gainers and losers for today. Now let's Spartan. I was going to talk about Spartan. Did they release anything today? No. Okay, so ignore Spartan Resources. Okay, so let's talk about some of the honorable mentions. Companies that did not quite make it into the top 5 announcements of the day. And where shall I start? 2 companies doing a trade or doing capital raising. Not surprising, Australian Gold and Capital. In fact, I don't have to look at the CommSec or just look at the chart. Not surprising, Australian Gold and Copper is doing a capital raising because the share price has absolutely taken off. Now, the share price did fall a fair bit yesterday, fell almost 20% yesterday. So they probably should have done the capital raising or announced the capital raising a few days ago. But this is exactly when a company should do a capital raising, when the share price has increased from 8 cents up to 58 cents. It's now 42 cents. That's exactly what management should do. Take advantage of a significant increase in share price. Now, on the flip side of Australian Gold and Copper, the worst time to do a capital raising is when the share price is at a long-term low. That's exactly what 3DP has done. Point Terra, one of the only 2 story stocks I own right now. Yes, Point Terra. I am hopeful this company can make it in the long term, but I am now becoming more and more wary that this company keeps on promising stuff and just not delivering. I need to see some delivery with Point Terra. And they're doing a capital raising, another capital raising, and share price is near an all-time low. Maybe not an all-time low, but definitely a long-term low. The last time share price was this low was back in 2020. And then what's his name bought some shares. Bevan Slattery bought some shares in July 2020. Share price took off, went to a high of 90 cents, and has now decreased to 3.8 cents because the company just keeps on disappointing their shareholders. And to be honest with you, when you look at the chart, there's just no reason to buy shares in this company. I'm holding shares, no reason. I'm not even thinking about adding to my position unless they show me, unless they prove their business model, unless they show me they don't have to do capital raisings anymore. This is like the worst capital raising or timing you can do. And yeah, they probably have to do it. It's just a really disappointing story, Point Terra. So much promise, and I'm not sure they're going to realize their promise. Point Terra and Australian Gold and Copper I'm just going to rule those. There we go. Uh, Temple Webster is doing a buyback. I don't know why. I don't think this is good capital allocation decision by management. Share price or the valuation of the company is not that good, low. So P ratio of 144.4. And in my opinion, the most important job of management, the CEO, is capital allocation decisions. You could also say and argue maintaining or changing culture or setting up a culture. I will listen to you if you do have that argument. But in my opinion, it's capital allocation decisions. What do you do with the money you generate in the business? It's really important. So, for example, you have four decisions: share buyback, dividends, research and development for future growth in the company, or acquisitions. So Temple West have gone down the road of buying shares back. Now, share buyback is really beneficial for shareholders when the valuation of the company is really low or it's undervalued. I could not make that argument and will not make that argument with Temple Webster. I think they are concerned the share price has dipped and they're trying to put a floor on the share price. And it's just not creating value for shareholders when a company is not undervalued. And I don't think there's an argument to say Temple Webster is undervalued right now. They did mention they have $100 million of cash. Why not do some other stuff with that cash? I don't know. That's the job of the management, and they decided upon buyback. Not sure if I agree. A few interesting mining thingies, results, drilling results. Aurum Resources up 8%. This company hits 163 grams per ton gold in 12 meters at 14.56 grams per ton gold at BD target. Now, I didn't even open up this particular announcement, but that actually is an okay hit. So I'm not surprised to see the share price up 8%. And let's have a look at the chart because I'm pretty sure this chart looks okay. They've released a couple of interesting announcements recently. Yeah, the chart looks absolutely good now. Share price has pulled back, and now we've seen share price rise again. So a really nice looking chart for Aurum Resources, and have a look at the volume as well. The volume tells a story, just like the share price action does. And if you combine share price action with volume, you get a complete story, not just half the story. So Aurum Resources doing pretty well there. We'll have a look at Serco. Serco have released their full year results. Share price is down, I think. Yep. So share price has moved into a downtrend. They've released their results today, and share price is down 5.6%. I don't have much interest in this company right now. It is valued fairly high. Market cap is $344 million. They did announce a relationship with Booking.com. When was that? Was that pre-COVID-19? Yeah, I think that was 2019. Share price did go up a fair bit, but you can just see the share price or the chart here up and down in waves. So I don't think this company is yet profitable, and I'm just a little bit wary about companies that have a market cap of $344 million and not yet profitable. And I do think a lot of that valuation is because of their relationship with Booking.com. Another company that released results today was a company called Tower. I'm pretty sure it's an insurance company in New Zealand. And this is their chart. And if you have a look at this is the weekly chart. If you have a look at the weekly chart, it actually does look a little bit interesting. It does look like it's breaking out or has broken out a few months ago on the weekly chart. Now, apart from the chart, I know nothing about this company. And if you just zoom out a little bit further, you can see the share price, if it refreshes, there it goes. The share price has been as high as $1.75 back in 2015. And over the past 6 or 7 years, share price really has done nothing, but it has been a downtrend. And maybe this is a shift in sentiment for Tower Limited. What's the market cap of this company? I have no idea. $279 million. Okay, so that's Serco and Tower. Let's have a look at Gummy Company. Company with a ticker code S66. Star Combo Pharma. No movement in share price today and no trades today. Wonder if the company is in a trading halt. No, it doesn't look like. I think this company is illiquidly traded. And the only reason I'm talking about Star Combo Pharma with a market cap of $16 million is because of something I said in their product update. and I saw the word gummy, and I went, "Is this about gummy, the thing you eat?" And I think it is. So he is pleased to confirm that the Therapeutic Goods Administration has recently issued a license to Star Combo for the full product manufacture of pastille products for the gummy market. The gummy market. And yeah, they do make stuff to eat and stuff. I'm pretty sure. I don't know anything about this company at all. Nothing about this company. Talk about gummy product outlook, gummy supplements, gummy. It's an authorized gummy manufacturer and supplier. They're probably talking about something subtly different than what I'm thinking, like gummy bears. I have no idea. I don't know much about gummy. Gelatin gives chewing gum and jelly clear trans. Yeah. So, yes, intriguing what I'm looking at here or seeing here. So I should maybe do a bit of research on Star Combo. Star Combo. There it is, Star Combo. Next one on the lists. Yeah, we'll talk about Jupiter Metals or Jupiter Minerals. So Jupiter Mine, sorry, up a little bit today, which is probably not that surprising. They did release an announcement today, manganese market update, not marked sensitive. And this actually was of interest to me because I'm actually shared of this company. Share price pulled back, and I found an opportunity to buy some shares in this company. And they're just talking about the manganese market. The most relevant portion of this announcement is right there. I've just highlighted this third paragraph. The current manganese prices published by Fast Markets are $6.29 per DMTU and $543 per DMTU FOB basis. The first one was CIF basis, both of 37% manganese or content. At 30th of April, so not long ago, just a month ago, the date of Jupiter's March quarterly update, the prices were $4.80 CIF basis and $3.92 per DMTU FOB basis. So the price of manganese has significantly increased in the past month. I think the market is aware of that, and that's why the share price hasn't really taken off. But there was a large shareholder who did sell some shares the other day, and that was an opportunity for me to buy some shares in this manganese producer. So share price broke out on the 18th of March. This is the weekly chart. And there was a little bit of a pullback because of the large shareholder selling some shares, hit the short-term moving average channel, and that was my signal to buy some shares in this company. So hopefully the share price takes off from here. Hopefully. Doesn't mean it will because I bought some shares, but hopefully it will. So that's Jupiter Mines. And two other companies I want to discuss. First one is Forestania Resources, up 136.84%. Now let's have a look at the chart because the markup is really low. So I don't expect the chart to be amazing. And yeah, I wouldn't call this a breakout. Or maybe. I think you could argue this is a breakout, but it seems like the market is excited about this company because they have acquired a highly prospective iron ore project, Nobbing. And there is a presentation on it. So have a look at that presentation if you're interested in iron ore. Now, one of the reasons I'm not that keen on this is the one-day candlestick is pretty weak. Share price today was as high as 7.2 cents. Now it's down to 4.9 cents. In fact, it's down to 4.5 cents. So it does look like the share price will close towards the low of the day, and that's fairly bullish. Sort of like this candlestick this company saw back on the 27th of June. That's a negative or a bearish candlestick. It's red. Share price closed at the low of the day. You want to see the share price close at the high of the day or near the high of the day for it to be a bullish one-day candlestick. So this is sort of trending towards that. Plus, I don't know anything about this acquisition. It could be a really good acquisition, but just don't know just yet. That's one of the reasons why that company or this company did not make it into my top 5. Not that interested in this sort of announcement. Now, a company that almost made it into my top 5 was Strike Energy, STX, up 7.32%, an operational update. Now, I don't know a lot about this company apart from there was a lot of acquisition news. They were acquiring something or something. So they did release an operational update. And typically I will read operational updates, and this wasn't much, but it was enough that the market is interested in this company and this particular announcement. Now, they talk about payback profile would be one of the fastest in recent history for a greenfield Australian oil and gas project. So total gross income received to date from this project is $47 million. So let's have a look at the chart for Strike Energy. STX. And, oh, chart looks pretty weak. What's happened? What happened back here in February? Share price absolutely plunged. Does look like there is an area of support at these levels between about 20 and 24 cents. Share price right now is 22 cents. If we have a look at the weekly chart, and the share price was in a really nice weekly uptrend and it's been destroyed. Whatever happened in February, it's been destroyed. Now, possibly this is a nice little support level at current share prices. You could buy around about 20 to 22 cents. And if the share price falls below 20 cents, that would be an immediate sell. But I want to know what happened in February. And that just shows you I don't know much about this company, but the chart doesn't look that strong. Now, I do have a company of the day, and I think I've gone through all the honorable mentions. Yes, I do think I have. I do have a company of the day. This company is called Comms Group, CCG. I have a feeling the share price probably hasn't moved today. Yeah, there's been no trading. Yep, no trading at all today. And this company has a market cap of about $25 million, I think. According to ComSec, it's 23.5 million. Now, I did not know this before I read their trading and financial performance update announcement. And I went through some of these numbers. I went, this actually looks pretty good. Operating revenue, $41.4 million for the first 9 months. Revenue of $5 million in March, a monthly record for the business. Underlying EBITDA of $5.1 million for the first 9 months. And that's nice little growth. And they reaffirm guidance of revenue between 53 and 55 million and underlying EBITDA of 6.5 to 7 million. I went, that sounds interesting. And I just assumed the market cap of the company would be like 80 million or 100 million. No, it's 23.5 million. Now, that probably means the market is not that convinced that this company is a really good growth potential company. And if you don't know what this company does, you're with me. I have no idea what this company does. Here we go. Provides a full range of IT and communication services for the cloud, including IT managed services, cloud hosting, cloud communications, and UCaaS, something as a service. Uniform company as a service. I have no idea what UCCAS. Let's just Google it. Unified Communications as a Service. Oh, that makes sense. Not. Actually, it does make sense because they are a communication services company. I did a little bit of research, or a little bit more research, when I saw the market was 23.5 million. There's one section of the business that is growing. The other two sections are not growing. I forget which. They have 3 parts of the company. In fact, let's have a look. Quick look, because this is company of the day. Let's have a look at their first half presentation. So this company is growing. Company is profitable, it seems like. And they do have, so underlying EBITDA of 3 million for this half. Here we go. So revenue by division, this is what interests me. So revenue has been increasing, but there's 2 divisions, the SME and the global divisions are not increasing revenue. So they're flat. In fact, you could even argue that the SME is going backwards, but ICT has been growing. They had no ICT revenue in the first half financial year 22. Now it's up to 9.3 million. So obviously they made an acquisition, but if you look at the half year revenue, it's been increasing every half year, almost. Flat last half year, but so nice growth. So, and EBITDA per business unit. So most of the business units, except corporate, which shouldn't be profitable or EBITDA positive, they're all positive. They're all positive. And cash flow, the company is operating cash flow positive by 1.7 million, and cash on hand increased by 500,000. So operating cash flow positive, free cash flow positive, profitable, growing at a slow rate. But I do have some questions about the company, and this is really the first time I've had a look at Comms Group, CCG. And then, of course, the last thing I looked at was a chart, and the chart says, no, sorry, we're not interested. The market is just not interested in this company. Even if you have a look at the weekly chart, company has been listed since 2017. You can see the share price really not doing anything. And even the volume has decreased significantly in the last 2 years. But company's profitable. Company is growing slowly. And yeah, so there are some things to like about this company and some things maybe not to like. So that is the company of the day, Commerce Group, CCG. Now let's have a look at the top 5 announcements of the day, starting with number 5, and that is Boss Energy. Share price down 11%, 10.8% today because some of the directors sold some shares. Where is it? So it's not marked price sensitive. That is actually a really good question. So someone's asking this. So why is it when directors sell or buy shares on market, it's not considered price sensitive? Have a look at the market reaction to this announcement. So change of directors and interest notices ×3, not ×1, ×3. In fact, they've mentioned here, Boss Energy advises that Managing Director and CEO Duncan Craib, Chairman Wyatt Buck, and Director Bryn Jones have sold a portion of their respective shareholdings on market. Okay, so this can cause panic when directors or insiders sell shares on market. And one of the reasons behind it is because people think the worst case scenario first, and they think the company is something bad's happened to the company, and the insiders are jumping ship. So I've got to sell my shares straight away. It's not necessarily a bad sign. So people don't understand that. Research has been done on this, and it's not necessarily mean that bad times are in store for Boss Energy. Now, there are some conditions on me saying that or the research. Now, they have found when a group of directors sell on market at the same time and it's large quantities, then it is a signal. But if one director sells on market one time, it's not necessarily signal. Now, this is 3 insiders selling at the same time, and I'm not sure how much they sold. Let's have a look. So Duncan Craib sold 250,000 shares. It's not a lot of his complete holding, so I wouldn't be concerned about that at all. Now, it says shares on exercise of options. He sold, that is a lot. So he sold 3.75 million shares and 250,000 options. So maybe he had to fund the exercise of options by selling shares. And what has Wyatt Buck done? He's probably done the same thing. Sold 291,000 shares. Not a lot. No, it is a lot. It's more than half of his holdings. And what was the other one? It was Bryn Jones sold 600,000 shares. And that's more than half as well. So this could be a little bit of a signal that they're selling most of their holdings, it seems like. And the market doesn't like it. Share price down. Now, this could be an opportunity because of this possible short-term hit in the share price. And if uranium keeps on increasing, this could be a good time to buy some shares in Boss Energy if you're bullish on this sector. And if you look at the weekly chart, it's a beautiful weekly chart here. And daily chart, it's a little dip into a buy zone. So potential buy for Boss Energy if you're not that concerned about all these insiders selling some shares. Otherwise, it all depends on your opinion of uranium moving forward. Has uranium more to go from here? No idea. And Boss Energy is going into production, if I remember correctly. Actually, they did mention here somewhere. Where is it? Commissioning on track as Boss prepares for first sales at 8th of May. There you go. So that's number 5 announcement of the day, Boss Energy. Some insiders selling some shares, including the managing director or CEO. Coming in at number 4, we have Pro Medicus. Share price only up 1% today. In fact, the share price has fallen and it opened at a high of the day at $119. So share price has fallen throughout the day. So Pro Medicus signs 5 new deals with a combined minimum of $45 million. The company keeps releasing these sort of announcements. The last announcement contract they released was November, actually 6 months ago. And before that, it was October. So it was 6 months where they did not release an announcement in regards to contracts, which is interesting. So Rudy was a little bit wrong. He said they keep releasing a contract announcements. Anyway, so I expected the share price to rally on this, and it did, but the share price has pulled back. And it's understandable because although I'm bullish on this company, I'm not overly bullish on contracts unless it's an unusual contract. And Pro Medicus did release a really unusual contract. When was that? Was it more than a year? This one here. Pro Medicus signs $140 million 10-year deal with Baylor Scott and White. I thought that was significant because there's one contract, 10-year contract with one medical institution or organization. Anyway, let's have a look at the chart, and this is a brilliant chart. Well, not, that's the wrong company. Pro Medicus, Century Select Primary Metals. So this is a beautiful looking chart. This is the daily chart going all the way back to last time was week, which was back in 2022. But if you look at the weekly chart, you're just going to see an absolutely stunning chart. And in fact, you have to look at this chart. If you go this far back, you have to look at not the adjusted, you have to look at a log chart. Yep. And in fact, you can see the share price breaking out in October 2013 at a share price of about 60 cents. You could have bought the breakout of Pro Medicus at 60 cents and have held it ever since then, because I don't think there's been a big signal to sell since then. So bought at 60 cents and still holding at $114.81 over a 10-year period. Brilliant looking chart for Pro Medicus. And yeah, and no reason to sell this company just yet. So that's coming in number 4. We have Pro Medicus. Number 3, we do have Peter Warren, who stole PWR. So I do like a company called PWR Holdings, but they have a ticker code PWH because Peter Warren Automotive Holdings stole the ticker code PWR. Now, I don't think they stole it. I'm not even sure how companies get a ticker code. Maybe they recommend to the ASX what the ticker should be, or maybe the ASX recommends the company what the ticker should be. I have no idea how this works. I've never thought about it. Anyway, Peter Warren has a ticker code PWR when PWR Holdings should have that ticker code because it's really confusing. People do get confused about this. On occasion, Ausbiz Core, you see PWH as the ticker code they're going to talk about, or the company they're going to talk about, and then the other company starts being talked about. And you go confused. In fact, even some of the analysis are confused. Now, Peter Warren Automotive Holdings did release a trading up today. And I'm always going to look at a trading update, no matter what company it is, even if it's a company more than likely I will never own. And that's probably the case for Peter Warren Automotive. So obviously they're a car dealership company. I'm assuming they are. Automotive dealership. Rich heritage for over 60 years. There you go. I've never heard of Peter Warren. So they have Peter Warren Automotive, Frizzell Sunshine Automotive, City North Shore Automotive, Mercedes-Benz North Shore Automotive. So it looks like most of these are in New South Wales. Anyway, the most important thing about this trading update is profit changes or expectation changes. Okay. Whilst revenue has continued to grow, so straight away that's a bad sign. Whilst revenue has continued to grow, so we know something bad is going to come after this. Peter Warren now expects underlying profit before tax for financial year 24 to be in the range of 52 to 57 million. Is this a downgrade? Yes. The reduction in earnings versus market expectations reflects the following. They go through 3 issues. A significant increase in vehicle supply by OEMs has led to greater competition. Level customer demand for new vehicles has reduced, so lower demand, increased competition, and Peter Warren interest costs have increased. So we're blaming high inflation, high interest rates, stuff like that. Anyway, so the question becomes, if you're a holder of this company, should you sell? Now, I wouldn't consider this company to be high quality, so I would never own this company for the long term. So I just trade it. So would I have had a position in this company as a trade? No, because the chart is telling me, get the hell out. Leave, run for the hills when it comes to Peter Warren Automotive. Share price has been in downtrend since March 2023, and share price has now collapsed. Maybe not collapsed is the right word, but is down 12%. And so the chart was telling us something here. And the chart is a representation of what the general investing community is thinking about the company. And the general investing community was thinking fairly bearish things about Peter Warren. Now, at times, the investing community, the market is not absolutely right, but generally it is right. And when you do see a negative announcement, typically the company's share price or chart is in a downtrend. And when a company releases a good announcement, typically the share price is in an uptrend. Very rarely do you see the opposite, share price in a downtrend, company releases good results. Sometimes you do see that, but even rarer than that, significantly rarer, is when the share price is in an uptrend and then the company releases something negative. I can only remember once that happening. That was TPG back in 2015. I think I've mentioned that once before. And that was at the AGM when, what's his name, David Teo said, our growth phase has come to an end or something like that. And the market hated that. Share price dropped like 20% in one day. So it's coming in at number 3. We have Peter Warren Automotive. Coming in number 2, we have Mitchell Services. This is an intriguing one. Share price up 8.14% today. Capital management update. I did a tweet. In fact, let's have a look at my tweet because everything is in the tweet. Here we go. So capital management announcement from Mitchell Services, significant decrease in debt over the past 2 years to 6.5 million from 39 million. In fact, they were saying or suggesting their debt at the end of this financial year will be 15 million. So there has been a significant improvement in the debt levels from their expectations. 2-cent final dividend. They also gave the shareholders a 2-cent dividend. So that means the company is on a dividend yield, not quite 10% now. It's a little bit lower than 10%. And $11.7 million in profit in the trailing 12 months, so the last 2.5 years. So at 43 cents, now it's 46.5 cents. The market cap of the company is 90 million, so it's about 100 million right now, which means the P/E ratio of this company is below 10, even at 46.5 cents. So at 43 cents, it's 8-ish. So 8-ish, this company has a P. So this company is cheap. But I have done a video on this company in the past saying, is this company cheap? Or this could be the cheapest company on the ASX. Mitchell Services. Mitchell. Is Mitchell Services a buy or value trap? Forget Mitchell. Oh, no. So, yeah. In the past, I did do a video on this company saying, is this company really cheap? It's still looking really, really cheap. But the thing against this company was the chart. There was just negative sentiment in this company. But I think there could be an argument that sentiment in this company is starting to shift to positive. And look at the volume. You can see a general increase in volume over the past 3 or 4 months. And the trend in the share price is starting to shift positive. So this is definitely a time to put this company onto your watch list. And even if the share price doesn't move all that much from here, and if they continue to perform in their business, this is a drilling company, by the way. So that sector is still highly cyclical, and you don't want to be in this company for the long term, just my opinion. But even if not much happens with the share price, and if the company keeps on performing, you get a nice dividend yield of maybe 10%. If you can buy it lower, maybe even more than 10%. So that's Mitchell Services, a fairly cheap company on the ASX, in my opinion. But I'm not a shareholder of the company, but I could consider myself becoming a shareholder, possibly, particularly if the share price pulls back. Now on to the announcement of the day. PlaySide Studios, only up 6%. Early in the day, it was almost up 20%. So we have seen some selling today. Share price got as high as $1.10. So in situations like this, I like to see how the trading plays out through the day. If the share price remained near the high of the day, I could have considered buying some more shares in this company. I am a shareholder of PlaySide Studios. So upgrade to financial year 24 guidance. This is exactly the sort of announcement I want to see. Upgrade, guidance. 2 words in that announcement I love to see. This means the company is performing better than management expectations, and that's exactly what you want to see. And typically when a company releases an upgrade, typically, the share price will respond really positively unless the market expected it. Sometimes the market does expect it. Now, this was an EBITDA upgrade. Now, it wasn't technically a revenue upgrade, but they did tighten their expectations in revenue, and it was at the upper end of their previous guidance. So they're now expecting revenue to be between 63 and 65. previous guidance was between 60 and 65, but definitely an EBITDA upgrade from 11 from between 11 and 13 million up to 16 to 18 million. So a 42% upgrade to guidance at the midpoint. Now, I would prefer a profit upgrade, but EBITDA is okay. Seems like most companies are obsessed with EBITDA, and that's all they wrote. Upgrade to financial year 24 guidance. Now let's have a look at the chart, and maybe we can understand why there has been a little bit of weakness in the company's share price today, particularly once it got to about $1.10. No, we can't. I thought maybe there was a little bit of resistance above $1, but there wasn't. I think this is just profit taking. Last time the share price of this company was above $1 was way back in 2022, so more than 2 years ago. So maybe there is a little bit of lingering resistance there. But overall, this is a good announcement. I like this sort of announcement. High volume coming in today. I'm just going to wait the next few days just to see how the market continues to react. We might see share price bounce, and that would be a good sign. And this is the sort of announcement I usually do pay attention to, and I will react or act upon this sort of announcement. So a really good announcement from Playside Studios, and then the chart looks pretty good. This chart is still in an uptrend, really good volume coming in. Look at that volume since the end of January. Really good volume, massive increase in volume. The market is becoming more and more aware of this company, and if they continue to financially perform, the market will love this company even more. Now, I was going to show you one more chart, DY6. And so remember, the share price of this company rose significantly yesterday and is down 30% today or so, which is understandable. Now, I'm going to put FRS into my watch list, my new watch list I'm developing, which is called High Volume Spec. High Volume Spec. And I've now got 8 companies in this list. And you can see significant movements from some companies, and you're going to see a lot of volatility in all these companies. So eventually, I'm just going to see if there's any pattern for when one of these spec companies releases an announcement. Is there any pattern that we can see or follow or use to generate some good trades in the future? So this is a project I'm going to do over the next few years, because I do think it's going to be a long-term project. I just want to see or discover any pattern. And because a lot of trading, even investing, is all about pattern recognition. And as humans, we love patterns. Anyway, that's all I got for today's video. Time is almost 4 p.m. The end of the trading day is almost upon us. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.